Now let us just go back to market cycles in India itself. And you've been in markets since 1989? 1980. So you've seen a lot, right from the Harshad Mehta boom to the dot-com boom bust to the infrastructure boom in 2003 to 8, 5 to 8. Go through all those three cycles and tell us, how did you go through them? What were your key takeaways and learnings from those cycles? And where are we, if you were to map our markets today and retrofit it into the cycles of the past, where are we today?
When I look back, I started in 87. We opened the doors for Motilal Oswal in 87. Though I'm in stock market from 1980 as an individual investor. So I've read everyday economic times from 1980 to till date.
I hope you read Money Control now.
Now, of course, everyday Money Control. So first bull run actually happened in 85, 86. That time I didn't have money. I was not in the market. But I watched it. It was quite a powerful bull run when Rajiv Gandhi and VP Singh combination came into power. It was a brief one. I think market doubled or something. But that first flush of bull run was visible. Boom bust cycle in India. Then I think it went up to about 800 or something index, Sensex I'm talking about. Right. And then it came down to about 400 or something, or a little lower than that, 330 or something like that. Then in 88, 89, it has started building up again. In 89, 90, it was more like 700, 800 kind of a Sensex. And by 92 March, in 19 months, it scaled to 4200. 6x in just about 18, 19 months. It is a kind of boom I don't think any major market anywhere in the world would have ever had. Right. Maybe Nikkei might have done, but not in this scale that in 19 months it was done this much. So that time we had just about started our work in Motilal Oswal, and we started with zero balance. We ended up with 30 crores of portfolio. So that's the power of what you call bull markets, and that's why the people love the bull markets. It brings a lot of wealth. And also it dissipates in the sense that the 30 became 10 the moment it collapsed. But that bull run was not about fundamental at all. Every bull market has a different definition.
Correct.
And it is not, if it is fundamental, then it's not a bull market. Right. You are getting paid for what you are.
Right.
So that's not bull market. Bull market is something where you get overpaid.
For what you are doing.
Or you get paid for nothing,
Correct.
That's the bull market.
Right.
So, so that's what happened in 92. Right. All junk companies went through the roof. Now, so it went 7x. Okay. Y2K was a very sectoral thing. The rest of the market were in dumps in 2000. HUL and all these kind of things were in dumps. Only tech stocks went through the roof. Out of nowhere, people found this software thing. I didn't know difference between software and hardware in 96. And then we made tons of money in Infosys, Satyam and Mastech and all those kind of companies, Hughes Telecom and all. We made a lot of money. VisualSoft also one of them. I didn't make any money, but yes, it was there. So we made like 10x in 2-3 years time.
Right.
That was a big one, sectoral one. Then it collapsed again. Again it became 1/3. Then in 2000, so that was sectoral and led by whatever global. That was the first global bull run. I mean, we followed the global trend.
Correct.
And we understood what is Nasdaq.
Yeah.
First time we came to know about Nasdaq. 2003, then when things were after 9/11, things were very dull, and we thought that it's the end of the world type.
Right.
We incurred loss for 2-3 months.
Right.
Then it started the mother of the bull run. That is 2003 2008. We expanded 100x in 5 years. We expanded 100x. And at that point of time, the bull run was completely fundamental. It was driven by commodity bull run and rise of China.
Right.
Vertical rise of China, and that drove the whole world. And then it actually ended up in a mortgage kind of crisis in US. They overextended themselves, and finally it became a meltdown in 2008. And then we were struggling and things like that. So these three bull runs have three different colors. So I'm sure this one also will have a different color. But it looks, this one, the one which we are in right now, 2020 post-COVID till date, I would say March, February, I think February 18th or something like that, we made the bottom. The day on which Prime Minister announced that lockdown, 24th March, I think.
23rd March 2020, yeah.
So that's the bottom of the market.
Right.
Okay. So that from there the bull run has started. So what, 23rd March means 2020, isn't it?
2020.
21, 22, 23, this is the fourth year.
Correct.
So we have done quite a bit of it. And we have come from 8,000 to 21,000. So we have already done 3x. Another 3x is left. Okay. Now how, if we...
So every cycle you're saying is 6x.
I'm just mathematically doing it. Okay, from, that was 7x, 6x, so something like that. So we have done halfway, another half is left. If we do it in 3-4 years, we are very well off. If we try to do it in 18 months, then we again have a problem. You know, the market should not go in parabolic way, because value is being created in linear fashion.
Right.
The market price should not go in non